Well, good afternoon, everybody, and welcome to the Next Homie Focus Group. I'm Chuck Vosberg, and along with Pat, who will be along in a minute, we're your friends in Florida. And today we've got a very important guest. We have Jeff McCarthy from Nexa Mortgage. And I've got to tell you, if you are a Florida realtor, you need to know Jeff. And I'm going to put his contact information in the chat later, and I'll also make sure that you get it in your next email. Jeff is by far the most creative lender that we've ever worked with. And believe me, we've worked with tons of them over the years. So he's been a great resource to us. He's also a very good friend. And today, Jeff's going to inform us about some ways that we can avoid accidentally blowing up a deal with the new rules, because the lenders kind of fit into this whole thing too. So I'd like to introduce you to Jeff McCarthy. Jeff, go ahead.
Hey guys, thanks Chuck. Yes, I'm super excited about being here. Thank you for inviting me, Chuck. And yeah, I'm gonna go through, obviously I'm a numbers guy. We're gonna go through some numbers in the beginning. Mostly I wanted to show some strategy, financial strategy, purchasing strategies and listing strategies in the beginning. And then at the end of it, we're kind of go look at some creative ways on, how NAR settlement and all that stuff is transpiring on my end as the lender, because it really is, this is the time where I think both teams need to come together the most and be on the same page when we're submitting offers, when we're trying to do the pre-approval and everything like that, because now bottom lines are affected and the BBAs and everything's, it's a work in progress. I kind of think of it as like Pigpen on the Peanuts. It's just chaos and dust and barbed wire going everywhere, but eventually it will calm down a little bit. But I've got some cool things just from a buyer's perspective on how to create value, and then also just how we are doing stuff in Florida with my teams and like Chuck and stuff. We're rolling stuff out. I want to say that if you see stuff that you're like, oh man, my lender's not doing this, and you're outside of Florida, just let me know. And my information's right there, because I can put you in touch with, I only lend in Florida, but I know a lot of people around the country that do what I'm doing now and what I'll show you, that are available to kind of give you that little bit of an edge, make your client shine a little bit brighter. So if you guys have anybody that you need, just let me know and I can put you in touch with people that I know I trust that rolls this stuff out. So hey Chuck, can you let me have sharing? Perfect. All right, so we'll go here. Can everyone see my screen?
Yes.
Okay, perfect. So we'll start with my favorite stuff, which is just strategies. So in Florida, if you guys are in Florida, we're slowed down quite a bit. Homes are sitting on the market a little longer. People are still kind of peeking their heads out to see if rates come down enough to really help them afford anything. So I wanted to show you this, and Chuck and Pat are familiar with this. I wanted to show you something from the buy side, something from the listing side, and then we'll kind of go into the NAR stuff. So the one thing that's been really keeping me afloat during these last 2.5 years of kind of super high interest rates and home prices not really coming down too much is just basically this buying strategy. So we'll kind of just look at the first slide here is just the baseline. Like someone's buying a $350,000 home. They're not paying any points. They're not asking for a price reduction. It just is what it is in the market. What does that look like for potential buyers? So here, 350,000, we're putting 3% down. It's just basically a first-time home buyer. And right now, with no points or anything being charged, we're at about 6.5 right now. So much better than we've been on over the last few months, where we were hitting the 7s and into the 8s. So I love to see 6 in this. So at 6.5, we're looking at an all-in a principal and interest payment. I didn't do any taxes and insurance. I just want to look at principal and interest, just to kind of look at apples to apples. We're at $21.45 with a cash to close. This is full cash to close of $23,000. So that's just a baseline to kind of look at. And what most people think in the buying world and even on the listing world is the best way for me to get the best value is to do a price reduction. So in this type of situation, we're going to look at, okay, what does a 3% price reduction look for a client? So we're just basically taking 3% off the purchase price. So the purchase price comes down to 339,500, basically the loan amount over here. Not doing anything with interest rate. All we're doing is saying, hey, seller, we just want to reduce the purchase price. I think that's getting me the best value. And that happens. So you can see here, the payment comes down to $2,081. You're only really saving $64 a month by coming down about $10,500. But in the minds of a lot of people, that's their best value. And in this environment, even with rates coming down, we're still way above the norm. Well, not historically, but over the last few years of what people feel comfortable about interest rates. So I wanted to show you what the exact same strategy of doing a 3% purchase price reduction, but what if we did a 3% credit to buy the rate down? So this is a permanent buy down. So instead of having a 350,000, a 339,500 purchase price. So we're going to go back up to the list price, and we're just going to allocate, instead of the purchase price coming down, we're just going to take 3%. We're going to permanently buy down this interest rate. This is why I love this strategy right now in this market, because maybe 2, 3, 4 months ago, I wasn't able to get this much purchasing power in a 3% concession, but now we are. So you can see the difference here. Everything is the same up top, except the interest rate comes down from 6.5 all the way down to 5.375. This is a permanent buy down. So the rate does not change. This is not a temporary buy down where you have a teaser rate for a certain amount of time. We're buying these rates down, and that's what's really kind of helping seller or buyers move into the market, at least from my perspective, is the two reasons we're going to outline in the next slide. But right now you can see, look, if we just took 3% and instead of allocating to reduce the purchase price, we reduce the interest rate, now we're saving a potential buyer $254 a month, not $64 a month. That's just the power of an interest rate versus a price reduction right now. So what if we just said, okay, my client is very happy at $2,145 a month. They're good with that. They just can't find any homes in this price range. This is where we kind of parlay the seller buy down into increasing our purchasing power. So in this one, you can see we've gone from $350,000 purchase price to $400,000 purchase price. So $50,000 we've gained by allocating 3%. So we're going to take that same 3% seller credit. We're going to permanently buy down the interest rate to 5 3/8. And at $400,000, I've now created the same monthly payment, $2,145, $2,145. So now what we're doing is we're saying, okay, we're not crushing budget. We're not saying, oh, go over a little bit on your budget. If their budget's solid at $2,145, we can now get them into a $400,000 home with the same monthly payment, but just with the 3% help from the seller. This is what I've been really surviving on. Chuck and Pat know this because I shove it down all my realtors' throats and my buyers' throats, because they got to know this, that it's not value, it's rate that's really causing the problem on why everybody's sitting on the sideline. Because I've had this play out a couple of times where people are like, okay, good, I'm pre-approved at 350, I'm good to go. And then they start looking at the home, and they're like, I can't find any homes that fit this budget. I need another bedroom, I need another half bath. Something's pushing them out. And then all of a sudden they're like, you know what? I'm just going to wait until rates drop. I can't find the home that I want in this market with this high interest rate. And then we start developing all these fence sitters. And now we're sitting in a market, especially in Florida, where there's a lot of fence sitters right now, and homes are sitting on the market a little bit longer than normal. So for the buying strategy, this is how we can get about $50,000. Now, I will tell you, rates are trending down a little bit. And back in December, when rates kind of like bottomed out a little bit, I was able to get $60,000 in purchasing power with the same monthly payment. So as rates kind of creep down a little bit, we can start keeping this up as long as buyers are kind of resilient and staying on the market. Obviously, we're in this like Goldilocks part right now where buyers are still hanging out on the fence. Sellers are motivated to sell. Once rates start coming down and they're start coming, and staying down, and the Fed starts reducing interest rates, then we're going to get a lot more buyers into the market, and that will pull us not into the market that we're in Florida. So we might not see these, strategies work as well. But for right now, that's a great buying strategy. We're still in the Goldilocks little period of, low buyers and sellers right there. So the listing one is really interesting. Now, For the listing strategy, it's basically taking the same thing we just did, but I just reverse it for a listing. So this slide at 350, this we're putting 5% down on this one. I just pulled the slides over, so the numbers don't necessarily match up to the other one, but this is a 5% down, not a 3% down. So that's why it's a little bit lower payment. But here, putting 5% down, 6.5 is the interest rate, 2101. So that's what I've been teaching sellers to kind of think about is how does this market affect a buyer, and how do I get my house sold, and how do I create more buyers for my home? So in this type of instance, basically the same thing. We're bringing down the price reduction by 3%. That saves a potential buyer $63 just because they're putting 5% down, like I said. And then we go ahead and we say, okay, let's allocate and let's market this a little bit differently. Let's keep the $350,000 purchase price, excuse me, and then provide the seller with the means to reduce their interest rate permanently to 5 3/8, essentially 5.375. So now we're saving a potential buyer for their home $240 a month. So this is kind of just the same thing as the last slides, except from the listing standpoint, we want to show the seller what they would have to reduce their purchase price to see the same monthly payment as pushing a 3% buy down. So this is where we're going to get interesting here. And from the listing agent perspective, it makes a lot of sense. So we're going to tell a seller, look, if you're going to take 3%, that's $10,500. That's out of your net. We're going to provide that to the seller to help them buy the rate down so that we can get more buyers into the market. You would have to reduce the purchase price by $40,000 in this market at 6.5 to see the same monthly payment as the seller just paying $10,500 to buy the rate down for a potential buyer. So this is where we're seeing a lot of movement here with homes that might be sitting on the market. Even sometimes purchase price reductions are not really doing it just because people are still a little trepidatious with rates in the 6s, and depending on your FICO, you could still be in your 7s, right now with the interest rate right now. So people are still a little wary about this, but this does two things. So it tells the seller, look, we could reduce your purchase price to 310,000, which no one's going to do. Why would I decrease my purchase price by 40,000 to get the same monthly payment? And the second thing is we can now get anyone who's pre-approved at 310,000. We can get them into your home at 350,000 because the monthly payment's the same. So now we've just increased your your buying pool simply because we've created an environment as if we're selling the property at 310 because the payment's reflected of that, but really the list price is 350,000. So that's what we're doing in this market to kind of help create a little bit of flow, because it's sometimes a little stagnant, especially in Florida right now, where we're seeing a little bit of stagnation right there. So I just wanted to open it with those two strategies just because they work really well in this market right now. So now's the fun stuff. So basically how me and Chuck and a lot of the stuff Chuck might not even know because I'm still rolling it out right now, how lenders are helping agents with the NAR settlement. Because believe me, I've lived through the financial crisis. I was commoditized. Mortgage bankers threw mortgage brokers under the bus and blamed the whole recession on us. So I've been there. I've had to pick myself up from the dirt, help myself create value, help myself not being a commodity. So we've been there. And now you guys are, trying to find that stable ground right now. So the biggest thing for a buyer's agent right now is why you? That's the biggest thing. Why am I going to spend money on you? Because back before, that wasn't a problem. And now this is front facing towards everyone. So why are they going to pick you? Why are they going to, cover any margin difference between what's on the agreement and what a seller might cover? Why are they going to look at you in different ways? So the number one thing I was asking buyers, I do this presentation quite often. Chuck, this is actually new, but over the last 2 weeks, I do about 2 or 3 a day. And I added this slide after a couple of them because that was the biggest thing I think buyer's agents were trying to figure out, like, what value do I give to a buyer? What are my 3 top values? And as we go through this, you guys can write this down too, but as we go through this, the the biggest things to think about is financial. What type of financial value am I giving my future client, my prospect client? Because they're giving you money and now they might have to cover any differences. But now what am I going to do to make up for the fact that they might have to come in with my some money to the table, or even cover my compensation completely? So what is your value? That's the biggest thing we can really look at. And that's where I come in a lot. So the biggest values would be the three top propositions, but really from a financial perspective. And then 4 questions to think about as we kind of round the corner on this thing would be, what is your plan if the seller doesn't offer compensation? Okay, we got to think about that question. What am I going to do? How am I going to explain that to a buyer? How does that look like financially? That's where I come in. What do the numbers look like? How does that look like? How can we, strategically plan this, or, have contingency plans in place in case the seller doesn't offer compensation? What if value doesn't come in at sales price? So this would be something where we'll just add our commission to the purchase price and we're good. Well, what happens if the value doesn't come in? Do we have a plan for that? So we're going to show you that. To compete against multiple offers. So what is our plan to compete against all this stuff? This is something I rolled out in 2020 and 2021. It's called the digital offer. It's amazing. It's what sets us aside. It's how I was winning deals when there was 20, 30 offers, all 8 paper, all 20% down, during those crazy times of low interest rates. But how did we compete? We're going to show you that. And then how to create affordable housing. I think everybody wants to know that question. So these are the 4 questions we really want to look at when we're kind of prepping ourselves for a buyer's presentation, or as we look down this presentation, how we're looking at different ways of presenting a listing, essentially. So, okay, for the buyer's presentation, these are the biggest things to show, because we really want to make sure that the financial value propositions are there. Okay, so the biggest thing is to show compensation options a lot. Now, if you notice this, the digital option, we're going to look at all this. Most of this stuff is from me. I can show you and give you the tools to show them what type of value you guys give, because it's one thing to kind of say I can do this. There's another thing to look at the numbers and actually show them the numbers. And so a lot of this stuff comes into play as being super tight with your lending partner, mortgage broker, whatever it is, but it's just to be super tight. My client, I mean, I call them, my clients, but the agents I work with, we are always super tight. We're always communicating. We're always figuring out what's the offer, how's the best way to structure it. And now what different type of compensations in case something happens where they're not showing anything. Appraisal gap. We're going to look at this. We call it a commission gap strategy now, but we're going to show them if you're putting 10% down or more on a property, we can get rid of an appraisal contingency, or if we're building the compensation into the purchase price, if they're putting 10% down or more, how we can convey to the listing agent and to the seller, we don't even need the property to come in at value. We've already got a contingency plan if the value misses. So that's really important. And all that gets shown to the seller and the listing agent through the digital offer. So that kind of just rounds out everything. And then teaching them rate buy downs like we just saw. Because if I can show them, hey, if we got the rate down to 5.375, we don't even have to refi in the future. So if you choose me and my team, we'll get your rate down far enough where at 5.375, we're not even close to that right now in interest rates. So it would take a long time for rates to come down that much. So you don't have to refi in the near future, which saves someone $10,000 to $18,000 in Florida. Refinances are still the same price as a purchase in Florida, but whatever the cost of the refinances in your state, you can save them that, because we're going to do a buy down that eliminates the need for a refinance. So that's how you can recoup some of your value right there. Okay, so I'm going to post in the chat when we're at this level. Let's see here. Chat, here we go. I'm going to post these 2 links. So these are presentations I made for the agents I work with, and I'm going to share them for you. This is all about NAR planning and NAR resources, and from a buyer's perspective, the buying side of the NAR settlement. So here are the 2 resources. I just put them in chat. You can look at them. It's got a ton of content in there. Some of it is for you, how to navigate it, from a commission-wise standpoint, and some of it's for the buyer. What does it mean? How much does it cost me if I don't use an agent? A lot of people are thinking right now, okay, if I don't use an agent, I save my commission, but there's a cost to everything. And so all of the content goes through that and shows a prospective buyer that using an agent will save you money, even though you might have to pay their compensation a little bit. So this buyer presentation really helps you set up your presentation. And if you click on the links, you'll notice there's some videos there. So one of the things, and Chuck, you and I are going to get together, if not this week, the next week, to get together and do an intro video with you and me. We'll do it on Zoom and we'll run through just an intro on it. Here's what it kind of looks like. I'll pull this in right now. So right here, you can kind of see there'd be a video here, and then Chuck and I's video would be here, just to give the prospective buyer an intro on who we are, what we're doing, and how we function as a team, so that anybody who's looking at using you guys can click on this link and actually see all the content that we created specifically for this new change in the environment. So the buyer presentation really focuses on a few things. The collaboration, that's a huge thing, because one of the things you want to show a prospective buyer is it's not just you in the corner fighting for them. It's all of us. It's the home inspection. It's any title officers we might need, an attorney that might need to be present or need to be brought into the situation, pest inspectors, transaction coordinators. You're building the team, and it's not just you they're hiring, myself included, the lender, everybody that you kind of wrangled into your team and collaborate on. We want to make sure that the buyer is well aware of all of that, because that provides a lot of value for that. The agent value, your presentation. So I have, and I can send these guys if you need to, I have blank presentations. They're in PDF. They're editable. So you can go in and put your information into it. And go ahead and send. We can actually incorporate that too. So if you have certain buyer presentations, we can put it into this presentation here, so that it would be our intro and then your buyer presentation, the one that you've given your buyer. You can stick it here so that they can look at it at any time. And then you can send this link to them. Hey, afterwards, just take a look at this. This link has everything that we were talking about, plus additional content. And they can go back to this link and see it every single time, and really know that you're stepping up a little bit more than any other person that's just trying to tell you to sign on the dotted line, and I'll show you homes that are only at 3% or 2.5 or whatever your compensation calls for. We have contingency plans for everything. That shows a lot of value. My lender support, obviously all of this stuff that I'm putting together is all for you guys to really start getting those buyers feeling comfortable, build rapport, and showcase the 4 questions we went over, because that's very important. If you guys click on this QR code, it goes to that same presentation I posted in the chat. So, but QR codes we're using a lot of these days to really help navigate our clients to a more finite position, instead of just giving them a YouTube link or something to show. I don't want any peripheral information coming to my client. I want my clients always to be directed into the next thing, the next content, the next resource we want to provide that really helps them clear the chaos of clickbait, but also helps us streamline our value to the agent. So that's why we use a lot of the QR codes in these presentations. But this buyer presentation is something that you and I, anybody's in Florida, we can definitely do collaborative videos. We can show them how much we work as a team, and then what they get when they're working with our team. Okay, the listing presentation. So this really comes in for any type of person doing a listing presentation, and I'll show you the open houses that kind of tie into the NAR. So the biggest thing with listing presentations right now is, well, is the seller going to pay anything? And then if not, how is the buyer going to structure this if the seller's not going to contribute anything? So from the seller's perspective, if you're a listing agent, you can show them, hey, look, if you're not going to bring anything to the table and you don't want to contribute, at least I can show you ways on how a buyer might come to you and structure deals, so that you guys can have a little bit of foresight into this. You guys can have contingencies plans in place and really understand what to expect when we have, either represented or unrepresented buyers coming towards you and making an offer. So showing the compensation offers would be one, teaching the appraisal gap. We're going to go through all of that, the digital offer, and then teaching the rate buy down. So all of the same thing that we were looking before, but for a seller, it's really important for them to put their feet into the shoes of a buyer. One, chances are they're going to go into those shoes momentarily once they sell the property. But two, it really helps them understand what the buyer's facing in this market, the sheer speed bumps they're going to face with higher home prices and higher rates, and then how we can present that to a seller to show that we've got contingencies in place for anything. So the open house is really important. So just in full disclosure, I live in New York. I only do loans in Florida because I lived in Florida for most of my adult life, and I just am comfortable with the homestead, title laws, all that good stuff. But I'm 1,800 miles away. So I can't be at the open houses, as much as I would like to, but I have different ways. And then I know some other LOs in states that do the same thing, but it's a good way to get unrepresented buyers and even represented buyers all on the same page without having to go through separate presentations to everybody. So the point of these open houses is to educate all potential buyers, showcase any seller incentives. We have videos. You can see the videos on this computer screen. We have videos here. One's for FHA, one's for conventional. You click on that video, it's going to show you the strategies, kind of like we saw in the beginning, on how the seller is helping you create affordability, and then provides insights and values, because we can show them if they're offering, what to do. If we're not offering compensation, how to structure different deals, different ways we can show a buyer how to set up the offer prior to them even going in and thinking about they're making the offer. Now, some agencies, some brokers are, how the DOJ is handling this, I think towards the end, no one's going to be able to offer any type of phone lip service. We're offering this much as I think we're going to head down that way. The DOJ is going to make sure of that. So we need to show them in an open house setting, hey, here's some ideas, here's some different things. Just give them a large, high level view of different ways that the NAR settlement is affecting them and their future offer. So that's how we can provide insights. And this QR code right here, if you click on it, it goes to this live listing. So you can kind of see how they're structured and how they look from a consumer side facing. And then we look at the open house flyer. So this is something that we can print out, I can send to you. And this QR code can do a couple different things. It can go to that web page that you saw right behind this one, where that you hand out the flyers at the open house, they click the QR code, it goes straight to that landing page. The QR code can go to your phone. I can point the direction on your SMS. It can send you a text message. We like each QR code is different. They're dynamic. It's called a dynamic QR code. So I can actually put the address in preemptively, and then all the client has to do is add their name, press send, and now you know what address the open house was at and their name and phone number, so you can actually capture leads. Or this could go to your CRM. It could go anywhere we want it to go. Most of the agents I work with, they're having this face the landing page, because you can see the landing page has videos in it. And it's a great way for any buyers to kind of get their head wrapped around what might they be looking at when they're submitting an offer and stuff like that. So the other thing that I am rolling out, I'm actually just ordered, are called QR frames. So this is, I'm going to send out, I test piloted this a little bit ago just to find out what size frames to get, and are people noticing them, and we had to go with much bigger frame than I thought. But now we're ready to get this going. So each of the agents I work with get 3 frames. One of them is scan to sign in. So they scan in, it can go to your phone, it can go to your CRM. The other one is scan to know your numbers or any type of incentives. They scan this, and then it can go into the seller credit, learning how to buy down interest rates, the temporary versus the permanent, whatever the agent wants to showcase. We just make an analysis for it and point that QR code right to that analysis, so that the prospective buyer knows exactly what's going on and how we can kind of, instead of doing a price reduction, how we can actually create affordability. And then the other one, the QR code is going to go towards that NAR buyer's kind of guide. So it will go, hey, the times are changing. Scan here for everything you need to know from a buyer's perspective on the NAR settlement. You click that scan, scan that QR code, and it pops in. I'll bring this back up. It pops into this, and then they can click on, hey, questions when considering a buyer's agent, the cost of not using a buyer's agent, first-time home buyer creative financing. We have all of this. I need to change that actually, Chuck. I'm glad I saw that. I'm using strategic financing now from Chuck and Pat's meeting I had last week. But this goes through everything a buyer needs to know, essentially, about the NAR settlement. What's happened, how it's changed, everything. I go from, this is a 15-minute little YouTube video that goes what happened, what's taken place, and how the consumer is affected. So it really goes in depth so that at your home, open house, you can have these QR frames all over the place, and it's very interactive, and you're providing great value for any buyer or unrepresented buyer that's coming towards you. So the digital offer, this is something that we do. Every single offer that goes in comes in with a digital offer. Okay, so it's a presentation that allows you to display multiple pieces of content in one place. And I'll show you what it kind of looks like in a second. But basically, the features are, we're going to streamline communication. We're going to increase transparency because we're going to actually show the listing agent and the seller the structure behind the offer. I say this one line all the time in my digital offer. An offer is literally a piece of paper. That's it. There's nothing behind it except numbers and words. And so increasing the knowledge behind the structure, why we're structuring like that, how is that helping the buyer? What are we doing with commission and compensation? How we're structuring the concession. If we send that all to the seller or to the listing agent, and they send it to the seller and have a meeting on it, we're already much higher than a lot of people that are just sending an offer, because I'm doing the video, my information's on there. I have, you can contact me at any time, and we're easily being able to kind of bridge the gap in communication and making the seller and the listing agent know, no matter what, you can always call me. So, and the other thing is there's no additional need from the buyer's agent. So they've got, I have a copy of the pre-approval. You're going to still send the offer, and then you give me a call or text me, Jeff, offers in for the Smiths, go ahead and send the digital offer. And then what I do is I go ahead and I submit the digital offer. So what it looks like from the agent's perspective is this little thumbnail. I put their listing in, just a picture of the listing. And then when they click on that, it goes into a minute, maybe a minute and 10 seconds. I don't like to be longer than 60 seconds. I actually like to be shorter, but it goes into a few things about how I am utilizing the, why we're offering it this way, why we're increasing the purchase price, how strong are the buyers specifically. Everything's been sourced in season. And so I'm kind of just letting the listing agent know a lot more behind the offer, essentially. But the digital offer basically has 3 steps. So the first step is the pre-offer huddle. So before we make the offer, we're getting together. Okay, all parties are in, me and Chuck and Pat, we're talking, how are we going to handle Shannon? What are we going to do with her? And then we all, okay, this is what we're going to do. This is the offer. You guys go and do your thing. I'm going to go and start making my offer video. So we break and execute. You take responsibility for the offer, submit it, let me know. And then I submit the digital offer via text. That's the next one. So the call, voicemail, and text. So once you guys are like, Jeff, the offer submitted, I call the listing agent. 9 times out of 10, I leave a voicemail for the listing agent, although I like to talk to him. And then I text it to him. So the voicemail would be like, hey, my name is Jeff McCarthy. I'm the mortgage broker for Shannon. Chuck and Pat Vosberg just sent you an offer for 123 Avenue. I just wanted to let you know I'm sending you a text message that then just kind of rides along with that offer, sheds a little bit of light on the structure of the offer, and lets you know lets you know at any time you can communicate with me via text or email. It has all my communication stuff available for you. That's what I leave on the voicemail, and then I text them this. When they click on it, it opens up into a video that then goes through whatever we're trying to offer from the pre-offer huddle. So this is what was really, really winning. I will tell you this, in 2020 and 2021, this is why people were picking us, because I was able to showcase how we can waive the appraisal contingency. Why? Through numbers. How can we do that? Showing the perspective, showing the seller and the listing agent, our prospective buyer is very well pre-approved. They've got everything set up, everything's in line. We have a conditional approval already, and be able to convey that through video, looking at the seller and the listing agent. And I was having about an 82% success rate on winning offers in 2020, which is unheard of because people were having 35, 40 offers, nuts back then. But to be able to convey information via video to show them the numbers goes a really long way in wrapping the seller in a nice, warm, cuddly comfort blanket that gives them, the stability they need to accept the offer, essentially. And if you scan this, that goes to a real digital offer. So if you scan that code, I'll leave it on the screen for a second. You can see how it actually looks like from the listing agent and the seller's perspective as well. Okay, so let's go into this financing here on the NAR settlement, because that's really, I think, as we come around the corner and we start seeing maybe more sellers being a little more reluctant. How do we finance this? How do we look at this from a lending perspective? So the first thing I do want to say before I show everybody this is Fannie Mae and Freddie Mac, way back in April or May, said, look, we can negotiate twice on any deal now. You can negotiate your buyer broker agreement and whatever percentage the seller needs to pay on that. And on top of that, you can negotiate any seller concessions to be used for rate buy downs, closing costs, whatever. The caveat is Fannie Mae and Freddie Mac do not want to see concession on a purchase agreement, because if you're a first-time home buyer and you're putting 3% down, Fannie says and Freddie says, look, the max seller credit you can get is 3%. So on a purchase contract, if you say seller to credit 3% to BBA and then seller to credit 3% to closing cost, that's a 6% credit in the eyes of Fannie and Freddie. So they want that verbiage to be removed. And I know you guys on the agent's end, or concession is compensation or could be, and it gets a little confusing like that. So from what I've been told from the lenders, from the underwriters, from compliance, is if you guys are doing the purchase contract and you did negotiate the two, it would be seller to pay whatever percentage to BBA and then seller to credit whatever percentage to closing costs, recurring and non-recurring closing costs. So that way there's only one seller concession or credit, or you could say seller to pay 3% to buyer broker agreement and seller to credit 3% to closing costs, essentially. So that the verbiage from an underwriting perspective is okay, and the loan can be sold to Fannie and Freddie. So that's just a little bit of intro. Now we can kind of look at these numbers here a little bit. So this is kind of just the baseline. Okay, we're going to look at a full PITI payment here. So if we're looking at the old way, the commission was in the list price. We're looking at $350,000. We're putting 10% down, so the loan amount is $315,000. Not doing anything with interest rate. Payment is $2,622, and cash to close is around $46,700. So that's putting 10% down, and the commission's taken care of. We don't need to structure a deal or offer anything else. So the second column is, what if there's no commission offered? So in this one, everything's the same. The payment's the same, the down payment's the same, but you can see the cash to close has gone up. In this case, I did 3%. It's gone up by $10,500 from $46,000 to $57,000. So basically, the seller is just paying the your fee in the closing cost. Obviously, I don't know too many. I look at a lot of bank statements. I don't know a lot of buyers flush with that much cash. So we need to look at a couple different ways of how do we go about financing this. So this one is, I think, going to be a go-to for a little bit, especially as rates come down, the market kind of heats up again. We kind of see purchase price increase a little bit. I am seeing, just from my appraisal perspective, I'm seeing appraisals come in about 1 to 2% higher than the purchase price. That's what I'm seeing a little bit come in. So we do have a little bit of wiggle room, I think, from a value standpoint and how to build in commission if we need to. So in this one, we're saying, okay, buyer or seller's not paying anything. We're going to add it to the purchase price so that we can finance the commission into the deal and structure it that way and preserve the cash to close. So in this one, we're just adding the commission to the purchase price. Everything else stays the same. The payment goes a little bit higher simply because purchase price is a little bit higher, but we preserve the cash to close. Okay, so it's just a little bit higher just for the down payment a little bit, but 46,700 to 47,800. We went up $1,000, but mitigated a $10,500 commission. But what happens if the purchase price and the value misses? That's the big question, right? So this is kind of taking an appraisal gap strategy and then going ahead and moving it into a commission gap strategy. So on this one, preface this by saying this strategy only works if you're putting 10% down or more. We need some bandwidth on the down payment in order for this to work. So if your clients are putting 10% down or more, then we can do these gap strategies all day long, no problem. So how are we doing this? So here, okay, now the purchase price goes back down to the original list price. So we missed on the value. Appraisal came in at an original list price. So you can see right off the bat here, though, my loan amount in this column is $324,450. It's the same loan amount as this one, but with $10,500 added to it. We're at 90% LTV on this. We're at 97% LTV on this. We've got, yes. So I'm sorry, 93% LTV, not 97. So we're just increasing the loan to value a little bit. This is what happens with an appraisal gap strategy. We're just taking the gap money, taking it out of the down payment, but we're also buying out the mortgage insurance in the same kind of fail swoop. So we're going to mitigate any type of gap money, not by an increase in closing costs, but by allocating the down payment a little bit differently. And that's what we're doing here. We're just taking the down payment, we're allocating some towards the commission of the agent, and then the rest of the money is going towards the down payment, essentially. But if you notice here, my payment is lower because and my cash to close, even though it's $350,000, has gone up about a little over $2,000. The reason is we're buying out the mortgage insurance at the closing. So at closing, they're coming with $2,000 more. We're doing what's called a single premium buyout. So we're just buying out the mortgage insurance at close. When you buy out mortgage insurance at close, if you have a high FICO and your debt to income ratio is good, they actually give you a pretty good discount on that. So here it's only $2,000 on this. So not only am I lowering my client's payment, but now they don't have to come in with $57,000. They just have to come in with $48,000. And that's how we can help mitigate these, new ways of structuring deals by creatively kind of coming up with ways to help on the listing side, give them a little peace of mind, because this is something I would show in my digital offer on how we can show them that no matter what, if appraisal comes in or not, it doesn't affect the transaction. We're not going back to the board to renegotiate. We are leaving it the way it is, and we're just moving on with the transaction. That's how we can actually win offers from a listing standpoint, by just giving them that little bit of stability in the transaction. So this works really, really well for anyone who's putting 10% down and more. The people that are going to get affected worse on this is literally VA, FHA, and first-time home buyers. They're just going to have a hard time trying to bridge that gap, because most people, and I've seen this 1,000 times since I work in the financing part of it, it takes a long time for somebody to even save up 3% as a down payment. Not only that, to even get closing costs. Most people get gifts for closing costs. They've saved a down payment or some portion of it, and then they bridge the gap through gifts, essentially. So if somebody's putting 10% down, we can do this, 10, 15, 20% down. This type of structure we can do all day. I just wanted to show you from a first-time home buyer, what does it look like for a first-time home buyer? So in this one, we're just going back in time prior to the NAR settlement taking place, and just going ahead and saying, okay, they're buying a $350,000 house, don't have to worry about commission, and we're getting 3% of a credit from the seller to help with our closing costs. So in this one, we're putting 3% down. You can see the loan amount is $339,500, 6.5, and the cash to close is $11,856, simply because we have about $10,500 that helps alleviate a lot of their cash to close and puts them in a really, really good low cash to close environment. So this is like the old way of doing it, how we were kind of structuring it if we needed help with somebody to bridge the gap on funds to close and how much money they have in their bank. Now, this would be if there's no commission offered, but still getting a 3% credit for the closing costs. Essentially on this one, the agent's commission becomes part of the closing cost, and so it offsets the 3%. And so their cash to close it goes up by the amount of money that's in the that's basically your whatever you've decided on the BBA. The cash to close will go up by this one. I just put 3%. So 22,356 would be that cash to close. Now, just from a first-time home buyer's perspective, anytime they see a 2 in front of this number, they get really scared. They like the teens or the 10s. So it kind of scares off first-time home buyers a little bit. Some not, but still a lot of people like to see a 1 in front of their cash to close instead of a 2, depending on how they, their price point. So on this one, what we're doing on the third one is just kind of thinking kind of creatively, strategically, and just saying, okay, what if we did 2% of the 3% commissions for you? 2% gets built into the purchase price. On this one, I feel kind of comfortable, and depending on the market, the environment, but if we went in at 357, chances are appraisal should be coming close to net value, even though we went up a little bit higher to kind of cover some cost on that. But we had a 2% commission built into the purchase price, and the seller's still giving us 3%. So on this one, everything kind of stays the same, except for we're increasing the purchase price, but you can see the cash to close has gone from 22,000 down to 15,500. So we're kind of helping trying to bridge that gap. I think first-time home buyers are really, really easily being able to afford homes if there's, $12, $13, $15, $16,000 cash to close. It gets a little bit harder when it hits in the 20s. But right now, if we can do a strategy like this and kind of split it up, some of it goes to purchase price, some of it comes from the seller credit, and then that helps mitigate their cash to close and it brings it down to a manageable level. This is something we can help first-time home buyers kind of help navigate that NAR settlement and really kind of keep their cash to close in a parameter that's good, but also, keep the transaction going as well. So I will note, though, in full transparency, if the purchase price comes in at 350, we're stuck with this. So that's where a lot of times when we start doing buyer presentations and when I'm looking at stuff, I have to really even check more boxes off because I need to make sure that my client has this cash and not this cash when it comes to verifying assets to close. Just because on a first-time home buyer basis, we don't have any bandwidth on taking it out of your down payment a little bit. It's got to come out of their cash to close, so to speak. So that's the way we can finance it and kind of get some creativity going on the finance side for first-time home buyers. Anybody have any questions?
Jeff, man, I got to tell you that was great. So packed with information. I'm just blown away with all these strategies. That was an awesome presentation.
Thank you.
If anybody hasn't,
I hope I didn't go too fast. I was like, I got to get all these slides in.
You New Yorkers talk so fast, man.
I know. Oh, I did it in the New York Minute, so
I didn't have any problem following you.
Perfect.
Brooklyn in the house.
That's right.
Yes.
So if any of you have any questions, just go ahead and unmute yourself. And,
yeah, Steve, if you have any questions,
speak right up.
I don't have any questions, but just an observation from one of those slides of the QR codes. It made me think how valuable it will be to not only just present a strong offer, but to really frame it in a way that sets your offer apart.
Mm-hmm.
That's the key in the buy when you're giving your buyer's presentation, you have to mention the digital offer, because that's how we go from, oh, it's just another piece of paper on my desk to what is this link and what is all this information in it? and then they can send it to their seller, and their seller is like, who else did that? No, and I guarantee you 9 times out of 10, it's going to be no one.
And starting to solicit reviews from cooperating agents on cross sales would be
Absolutely.
just, I think, pivotal.
Absolutely.
So, good job, Jeff.
Yeah,
Thank
that's
you.
absolutely right. And I want to remind you, if you're in Florida, you need to know Jeff McCarthy. And if you're not in Florida, uh, I just want to remind you that Jeff mentioned that he knows a lot of other lenders around the country who are like him, who do this kind of work. And so contact Jeff. He could.
With the digital offers, so this, I'll share my screen real quick again.
Sure.
Because this is the pivotal. This program right here is basically what we kind of deliver our content. It's called Lender Marketing Platform, and I don't know how many loan originators are there left in this world, but there's only 600 people using this program. So this is how we can take anything you want. If you've got videos, if you've got a sizzle reel, if you've got a Matterport, anything can be put in here. I can put anything we want to really showcase any type of open houses, any type of digital offers, any type of like initial analysis for our clients. Because when you send me a referral, they go through the pre-approval process. Before I send out a pre-approval, they get something that looks exactly like this, except it goes through all of their numbers before they say, let's go and get it fully pre-approved. And it's got your information at the top and everything like that. So it's delivered very, very, very concisely, because the last thing I want to do is I don't want to give any peripheral vision to our clients, especially when it comes to YouTube. These are all unlisted. And if you go on YouTube and search first-time home buyer, my God, no wonder everyone's sitting on the fence. It's all a matter of, this is the worst time to buy. You're stupid if you bought in 2020. I can't even tell you all the crazy drama that's on there. And I wanted to eliminate that and just show them what they need to see.
Well, that's right. And also that information coming from a lender, it really has a lot more authority than it does coming from us, because we're salesmen, it's like, hey, everything's great.
Exactly. The other thing too is, before we even talk, if you have clients, before you even talk about a BBA, you just send them to me, because a pre-approval supersedes a BBA any day of the week. Why would I even waste my time if they're not pre-approved? But what that does is, it gives me a lot of time to sell the value of an agent to a client who hasn't signed an agreement yet. Because I'm going to show them through numbers. I'm going to ask them a question. This is a question I ask all my buyers now. If someone gave you $200,000 and in 10 years says, I want $275,000 and you keep the rest, what are you going to do? Are you just going to go log on to an E-Trade, create an E-Trade account and just start spending the money? No. You're going to get coaches. You're going to get mentors. You're going to look at financial advice. You're going to protect that asset, because you want everything after 275 is all your money. And that's the same thing we need to tell our clients, that, look, this is a home, this is a shelter, but this is how you create your net wealth for retirement, for future, for your family. And that's why we want to protect that as much as we need to right now.
Well said. Well, Jeff, I can't thank you enough for coming on here today and,
you're welcome.
and teaching us all this. And we just really love how you help, and your whole helping and partner spirit. It really fits into what we're all about here at Next Home, and we love working with you. So
humans
thank
over
you
houses.
again.
I see it right there.
Yes, sir.
Yep, that's true.
That's our motto, and we know it is yours too.
Absolutely.
So thank you again.
Yeah, you guys are welcome.
Hope to see you all back here in 2 weeks. This is the Next Homie Focus Group. We meet here on Zoom every 2 weeks at 1 o'clock Eastern Time. If you're not already on the Next Homie Focus Group Facebook page, please join us so you'll get all the information first. So thanks again. Hope to see you again real soon. Bye-bye.